Welcome back to Investing Talk Podcast. Today, we're taking a closer look at an upcoming earnings report that has a lot of people curious. Constellation Brands. We're going to try and unpack their fiscal Q2 2026 outlook and help you figure out what's truly important here. Our mission today is really to sift through the information that's out there, highlight the key things you need to know, and give you the essential insights as this major beverage company gets ready to release its latest results. It's all about understanding the moving parts, before the numbers actually drop. And hey, before we jump in, if you find this discussion valuable, please do hit that subscribe button, give us a like, maybe leave a comment. And definitely, if there's a specific company you'd like us to analyze in a future session, just let us know in the comments below.
Absolutely. And this particular report for Constellation Brands, it's for their fiscal Q2 2026. That covers the quarter that ended back on August 31st, 2025. The company is set to report these results on October 1st, 2025, after the market closes, Eastern Time. So, yeah, for anyone watching closely, the wait isn't much longer now.
Okay, so we know the date, October 1st. But as we started digging into the available info, I was really struck by what's sort of missing. Usually getting ready for earnings like this, we'd have, pretty good handle on the analyst consensus for revenue or earnings per share, maybe even a whisper number floating around. But for Constellation Brands this quarter, those typical benchmarks, they aren't readily available, at least not in verifiable public sources.
Yeah.
What do you make of that gap?
Yeah, that absence of a clear analyst consensus or even a whisper number, it is fascinating. And it's more than just like an information gap. It really raises an important question for anyone watching this company. Without those standard benchmarks, how do you frame your own expectations? I mean, in a market often driven by algorithms reacting to beats or misses, Constellation Brands is kind of asking investors to, do their own homework. This whole situation forces us to focus even more on the company's own guidance, any recent operational updates they've put out, and, the strategic shifts they're making. It's pretty rare, actually, and it signals a higher degree of uncertainty going in.
That's a great point. It's almost like they're saying, look at us, not the crowd. So while we can't tell you what the street expects in specific dollars and cents, we can confirm the conference call and webcast details will be up on their investor relations events page. And, for those who can't listen live, a replay is usually available there too. Always useful for digging into the management commentary.
Precisely. And if you zoom out a bit, this scenario just underscores how important it is to look beyond just the headline numbers sometimes. You need to understand the narrative, the story the company's telling. When consensus data is scarce like this, the company's own words, their strategic moves, their forward-looking statements, they become absolutely critical for you to consider. It forces a more fundamental look, evaluating the actual operations rather than just relying on analyst sentiment as a shortcut. You got to build your own conviction.
But here's where it gets really interesting, the pivotal moment maybe. Just a few days ago, September 2nd, 2025, Constellation Brands Management gave an updated outlook. And this update reveals a fundamentally different company. This isn't just a small adjustment. It feels like a major strategic realignment.
Oh, it absolutely is. A significant transformation. The company's updated guidance explicitly excludes the impact from the SVAGA brand and a big chunk of their wine divestitures. This isn't just cleaning house. These divestitures are expected to lower year-over-year results by a huge $711 million in net sales.
$711 million. Wow.
Yeah, and $245 million in gross profit less marketing for fiscal 2026. This resculpting means they're shedding major parts to focus elsewhere. It fundamentally changes their financial profile. It's a very clear strategic signal.
That is a massive amount of revenue and profit just removed from the equation.
Yeah.
So we're looking at a leaner, definitely more focused Constellation Brands, which means, of course, the comparable numbers from last year or even last quarter will look dramatically different. Makes a simple year-over-year look pretty misleading without digging deeper. So what does this mean for their core business? What's actually, left in the tank after selling off so much?
That's the critical question, isn't it? And frankly, what's left in the tank seems to be a powerful high-margin beer engine. This reshaping isn't just about what they got rid of, but what they're amplifying. When you look at their segment commentary, the picture for their beer business looks quite strong. Beer depletion measures basically how fast beer moves from distributors to stores, were reported up through July 2025. That's according to both the Beer Institute and the company's own data. And furthermore, depletion and retail scan data from Circana. That shows continued strength for their big import brands like Corona and Modelo right through mid-August 2025. It suggests really robust, consistent demand for those key products, which are now, front and center.
And that makes sense seasonally too, right? Summer is obviously prime time for beer sales.
Yeah.
But doesn't relying so heavily on that seasonal strength, especially for Q2, maybe amplify the risk if consumer habits shift even a little?
You're hitting on a really crucial point there. Historically, yes, the beer segment is stronger in the summer months. That lines up perfectly with their fiscal Q2 ending in August. So seeing strong numbers now is definitely positive. It's what you'd hope for in their peak season.
Hmm.
But your point about risk is valid. Seasonal demand is a tailwind, sure, but showing consistent growth beyond that, showing resilience if consumer tastes wobble, that's going to be key to proving this focused strategy works long term. The question isn't just did they sell a lot of beer in the summer, but how sustainably can they keep that momentum going, especially now that beer has to carry much more of the weight.
Right. Okay, so with these big divestitures, SVEGK, parts of the wine business gone, and this intense focus now on beer, what should you, our listener, really be watching for when the report drops on October 1st? What are the key data points that will tell us if this big strategic bet is actually paying off?
The absolute key metrics to watch will be beer depletion growth and, crucially, beer gross margin. That combination tells you about the health and the profitability of their core portfolio, mainly Corona and Modelo. It's so critical because of that huge segment mix shift after the divestitures. They're much more concentrated now.
So the performance of that beer segment is everything.
Pretty much. We're looking for strong depletion growth, ideally showing they're not just holding market share, but maybe even expanding it. Think high single digits, maybe low double digits. And for gross margin in beer, you'd want to see that pushing higher, confirming the profitability of this leaner focus. Is it making them more efficient?
Got it. So it's less about the headline revenue number, which is going to be messy because of the sales,
Yeah.
and more about the underlying profitability and growth momentum within that core beer segment. You're looking for signs of efficiency, signs the market still loves those brands.
Precisely. And if you put this into the broader market context, the trends actually look pretty favorable for them right now. Industry trackers like the Beer Institute, Circana, they consistently showed robust demand for imported beer basically all spring and summer from March through August 2025. So the market conditions seem fundamentally supportive for Constellation's renewed focus. They're leaning into their strengths in a segment that's actually doing well. That's a significant tailwind.
Okay, good context. All right, let's game this out a bit. Thinking about the possibilities here, what would a really good report look like? One that confirms the strategy is working. And conversely, what could cause some real concern, given all these moving parts and the lack of consensus? Let's paint the bull and bear scenarios.
Okay, the bullish scenario. Here, we'd see that beer segment really shine, truly outperform expectations. Not just positive growth, but maybe accelerated growth. We'd be looking for beer depletion growth, maybe accelerating past that 5-7% year-over-year mark, clearly beating the overall beer market.
Oh.
The strong trends we talked about for Corona and Modelo would continue, showing market share gains, maybe even successful price increases, that premiumization factor. And critically, you'd see significant margin expansion in beer, that gross margin pushing higher, maybe even above expectations, signaling real efficiency gains from shedding those other assets. That would be a clear validation of the strategy.
Oh, and management confidently reiterating or maybe even raising full-year guidance for beer. That would be icing on the cake.
Makes sense. And on the flip side, the more bearish outcome. What are the potential potholes here, especially with those tricky comparisons? Yeah, the bearish case. Well, one issue could be that the comparables are just hit harder by the divestitures than people realize, even with the updated guidance. Investors might just struggle to make sense of the new, leaner numbers against the old ones, leading to confusion, maybe an overreaction downwards. You might also see core beer margins come under pressure. Maybe marketing costs went up more than expected to defend share, or perhaps input costs, aluminum, barley, transport, whoopin'. Maybe those rose faster than they could pass them through in pricing. That would squeeze profitability.
Right, inflation is always lurking.
Always. And there's also a smaller possibility that sales in the wine and spirits brands they kept might show some unexpected weakness or deceleration. Even though the focus is beer, weakness elsewhere wouldn't look great. It would cast a little doubt on the overall portfolio strength, even the parts they kept.
This really does highlight just how complex it is to analyze earnings when a company is going through such huge strategic shifts. Especially, like we said, without those usual analyst consensus numbers to act as a guidepost. It makes the report less about a simple beat or miss
Exactly.
and more about understanding the new shape, the new trajectory of the company. It's a real fundamental test.
It absolutely is. The narrative, the commentary from management becomes even more crucial. The investor's job is to read between the lines of the numbers, to grasp the real operational story that's unfolding.
So pulling all this together for our listeners, how do we lean overall, considering Constellation Brands heading into this report, especially with these unique challenges and uncertainties?
Our overall leaning is, I'd say, neutral to cautiously bullish. Look, the company's guidance update definitely shows they're being proactive, and it signals confidence in their beer segment after these big divestitures. They've effectively reset expectations.
Which can be smart.
It can be. However, that conviction, our conviction, is definitely tempered. It's tempered significantly by that lack of verifiable consensus data we keep mentioning. And also, signals from options pricing, which usually give a hint about expected volatility and the technical chart setup information, that stuff is also harder to come by or less clear right now. These gaps just mean there's a higher degree of uncertainty than usual surrounding this report. And that's why the confidence score for this particular analysis is only a 5 out of 10.
Okay.
It acknowledges the positive underlying beer trends, yes, but also that big informational void and the challenge it creates for getting a clean read.
That 5 out of 10 really says a lot. It captures that murkiness, doesn't it? Despite the positive signs in the core business. So what should someone think about if they are looking at this from a trading perspective, specifically with this higher uncertainty?
Yeah, if you're considering a directional play, betting on the stock going up or down, you need to be really aware of the elevated gap risk. Because of the huge impact of the divestitures on the numbers versus history, the stock price could open significantly higher or lower after the report, maybe without much trading in between. That's the gap.
Right, a sudden jump.
Exactly. The financial landscape has just changed so much. Comparing past to future is tricky. Volatility could definitely be high. So sizing your position carefully, managing potential slippage, that difference between your expected trade price and the actual fill price, and just maintaining discipline in your strategy are absolutely critical. And for traders specifically focused on volatility, it's tough because, as we noted, we don't have reliable front week implied volatility data or that expected move projection from options. That lack of data just adds another layer of uncertainty.
So any alternatives, maybe?
Well, as an alternative, or maybe as a hedge against some of this single stock risk, you could consider pairing Constellation brands with some U.S. brewery peers. Maybe look at Anheuser-Busch InBev or Molson Coors. Or even use a broader sector ETF overlay like the Consumer Staples ETF, XLP. That might help mitigate some of the company's specific risk tied to Constellation's newly focused portfolio.
Okay, that makes sense. So wrapping up, what does this all mean for you, the listener? When we look at Constellation Brands' upcoming earnings, it's really not just about the numbers themselves. It's about how those numbers reflect a company deep in transition, strategically betting big on its most profitable segment. It's about understanding the story behind the data, especially when those usual signposts, the consensus numbers, are missing. This quarter is a huge test for their refined focus.
And this raises, I think, an important question for you to chew on after listening. What are the broader implications of Constellation Brands' big strategic shifts for the entire beverage industry, particularly as consumer preferences keep changing? How might other big beverage companies react to this kind of focused strategy, this laser-like approach? What does it suggest about the future diversified portfolios versus concentrated strengths in this really competitive market? Something to think about.
Definitely something to think about.
Yeah.
As always, please remember, this analysis is for research and educational purposes only. It is not investment advice, and we haven't considered any of your personal circumstances. Thank you so much for joining us on Investing Talk Podcast, and we'll catch you next time.